Good afternoon, and thank you for joining us today. My name is David Talbot, Managing Director and Head of Research at Red Cloud Securities, and I'm delighted to host our Red Cloud webinar on uranium today. We're going to hear from International Consolidated Uranium Management Phil Williams, President and CEO. And during today's webinar, he's going to provide an overview and outlook for the company, and then we'll take some questions. So please type your questions into the chat box at any time, and we'll get to as many as we can. Before we kick things off, first we need to discuss the fine print. During this Consolidated Uranium webinar, forward-looking statements may be made, and I direct listeners to its forward-looking statements outlined on page 2 of their corporate presentation, and that can be found on the company's website at consolidateduranium.com. For Red Cloud Securities, Inc., I would highlight that this webinar is for information purposes only. It should not be considered a solicitation or recommendation to buy or sell securities. We note that this call does not consider the particular situation or needs of individual investors, and participants should rely on their own investigation and seek their own professional advice before investing. Please see our most recent research located on the Red Cloud website for specific disclosures on consolidated uranium. Now, before Phil steps up, I would like to say a couple words. Uranium stocks, they have seen some downward pressure on news of Cigar Lake mining restart. So I think actually today and going forward is going to be a good entry point here. Cameco did decide to put its largest uranium mine back into production following a COVID-19 induced interruption in December. This will be viewed as additional uranium supply and lead to a reduction in uranium spot purchases to replace that lost production. We do estimate that about 6 million pounds of production has been lost to the company, and assuming it can return to production sometime this month. Now, restart timing is somewhat dependent on how quickly Cameco can get that workforce back to the mine site, and it really hasn't produced any production guidance at this point. That said, we do think Cameco is still a buyer in the spot market, and this is as normal course of business because they have deliveries into long-term contracts that are typically much higher than its own production rate. And we also believe that the return to long-term uranium contracting really is key here to sustaining higher uranium prices. The recent strength in the spot market is largely a result of emerging buy and hold strategy by several companies, and we've seen 6.4 million pounds come out of the spot market because of that. And since we've covered the stocks, the uranium sector since 2007, I really haven't seen this uranium mining and development companies buy spot uranium like this, at least without not having delivery contracts at the time. And let's exclude at least the two physical uranium holding companies. But the result has been spot prices rising to almost a little bit over $30. They're a little bit below $30. And right now that's sort of in line with year-end 2020. So finally, I just wanted to point out some White House American Rescue Plan news from a couple of weeks ago. This is Biden's new $2 trillion $2 trillion infrastructure plan. Definitely positive for nuclear power, electric vehicles, rare earth elements, other critical elements that matter to us in the uranium and the mining industry. But besides kickstarting a COVID-19 impacted economy, the goal of the spending spree is really to, quote, position the United States to outcompete China, end quote. And I think we should be pleased with the attention that was given to nuclear power, specifically it as a recognition of a key source of baseload clean energy along with hydro. And there's major infrastructure spending coming down the road. They're modernizing power generation, delivering clean electricity. They're going to leverage nuclear and hydro, as I mentioned. They're going to invest into climate R&D priorities such as advanced nuclear, and there's support for American-made advanced nuclear reactors and nuclear fuel. So it's definitely good for uranium, good for green energy. And with that, I'm going to now turn it over to Phil Williams to update the audience on the company. Phil.
Thanks very much, Dave. And thanks for everyone joining, and thanks to Red Cloud for hosting us again. This presentation comes just more than a month from our last presentation at the Red Cloud PDAC event. So we decided to just update the presentation, do it a little bit differently. We're focused on what's changed since that presentation. I think we are going to talk enough about the company so those of you that are new to the story will catch up. But I think just to mix it up, we'll go through sort of the new things that have transpired in the company and the path looking forward. So as a summary, this is the corporate overview. The company has been focused in the uranium space for not quite a year. I joined the company in March, and we transitioned into a uranium company from a gold company in May of last year. And the strategy is really pretty simple. We're international consolidated uranium, and we're out there acquiring and developing uranium projects around the globe. Why are we doing this? And why did we undertake this strategy? Well, last year, we recognized that the uranium market was emerging from a prolonged bear market. We saw there was excellent opportunities to acquire assets at those times at particularly peak or low cycle prices, and that consolidation represents a proven strategy, something that I'll talk about throughout the presentation. We also, as a team, have significant experience in the uranium space. The original company was founded by the group behind NextGen and Mega Uranium, and some of those gentlemen are still involved in the company. And we've also brought on new management, including myself. I've been around the uranium space almost as long as Dave Talbot. Also started my career as a research analyst back in 2006, covering the uranium space. But we've also added quite a few other people to the team. And one of the things we're going to focus on today is the additions to the expansions that we've made to the team. We do still have some gold projects in the portfolio, which represent future upside. But what we've done since we executed the strategy is we've made the acquisitions on the right-hand side, 5 different transactions, 6 projects in Australia, Canada, and Argentina. And of course, we'll take you through those projects and how we acquired them as we go. So, as I talked about, we're going to really focus on what we've done since we last spoke. At the top of the list is we've strengthened the balance sheet, and thanks in large part to Red Cloud, we closed a financing of just over $6 million on March 4th. Importantly, we brought in new institutional investors, also existing institutions participated, and I'll take you through a little bit of that in a second. Other things that have happened is the company itself has gained some good market traction, and we'll show you how both the price of the stock, but also the volume has been on the upswing, and I think that critically underscores what's happening with the story and how it's getting more attention. The uranium market is picked up, and Dave did a good job talking about what's happening. I'll touch on a few other points there, but certainly between the market itself, spot price on the one hand, but equities have quite frankly outperformed. The uranium market is getting a lot more attention, so I think the time is very good to get into the space. We've expanded the team. I'll talk a bit more about that, and then we'll go through the current projects. And I think what a lot of people want to hear about, and while we can't go through too much of it, I think what I'd like to leave people in this presentation with is that we continue to have a very robust pipeline of opportunities, which are complementary to the portfolio that we have, and I think we will we'll surprise some people with some of the moves that we're going to make next. Okay, so on the capital structure, here's the updated chart. Everything in this presentation is updated for Friday, where stock closed at around 233. And if you look at the table, the chart on the right-hand side, we've overlaid volume there. And that was the point I was trying to make earlier, is that both, obviously the price has increased, but also volume. So, we're getting days where we're even doing sort of $2 to $3 million of trading volume, which I think is an excellent sign for the company, and just the broadening of the shareholders that are watching the story and participating in the company. And we now have cash and cash equivalents of about $14.4 million. So we're very well funded to execute on our strategy. And as we talk through the existing portfolio, the focus of that capital is all about new acquisitions. We're not spending huge amounts of money on the projects we have. Everything is really aimed at bringing in new acquisitions. And the shareholder base, I think, is also another important point. We have pretty significant management and insider participation, and I would highlight that all of those shares have been purchased, whether it's by myself or other members of management and the board in placements in the last year. And but then behind that, we have Mega Uranium. They were one of the original groups that helped kind of change the strategy here, but we've layered in probably 15, maybe as many as 20 different institutions around the world that are focused on uranium in some cases. So Sachem Cove and Segra, who many of you might be familiar with, but also resource funds generally around the globe. And I think that's a theme. We're seeing a lot more investors come into the space, and certainly Consolidated Uranium is picking up those investors through participation, particularly in that last financing. Dave Talbot remains the only analyst covering the stock. We're thankful for that. The uranium market. So Dave, I think, did a really good job talking about where we are, and again, I think that so we won't belabor this. I think Dave's point about the spot purchasing by both financial players, Yellowcake, and some of the uranium companies is quite an interesting new dynamic, and certainly had an impact in the price. We're talking about, by our counts, it was over 8 million pounds of uranium, $250 million-ish of demand in the spot market. That's a pretty significant amount of buying, obviously, and price responded to that. It's cooled a little bit in April, but certainly that doesn't give us any pause. The points that we would make when we talk about the uranium market is, we think the price is going to remain strong. And we think that this level is kind of the new base, and it's probably going higher. Of course, our business plan of acquiring assets, we're on the fence on how fast prices will move. We still have more acquisitions we want to make, and the higher the price goes and the faster, the more expensive and potentially more difficult those transactions become. But over the long term, we continue to be relaxed and very convinced that the price must go higher. Price must go higher if you want to incentivize new mine development, which is clearly required, both from, as we look at the demand for uranium in the future rising, but also just the natural reserve depletion that comes in any mining industry. And then how have we done? So we showed you the share price. We've outperformed our peers pretty much on every metric. And we've selected a group of companies that we think reflect, which are global developers of uranium projects in different jurisdictions, some similar, some different, but just a general kind of grouping to see how we perform. So we obviously think that we can see that we perform quite well, but we also think we remain attractively priced and on a fairly basic metric. And thanks again to Red Cloud for helping put together some of these numbers. The basic metric of enterprise value per resource, so per pound of uranium, we're still trading below the group average. And the way that we reflect these numbers is we show where we are on a uranium-only basis, and we'll take you through our resources in a second in terms of exactly how many we have and in what category and in which project. So based on just our total pounds, we're trading at 88 cents. And then we also have this vanadium kicker, which we have in a couple of our projects, and we'll talk about that. And when you add the vanadium in on a spot for spot basis, you can see that we're trading on a per equivalent pound of uranium down near the low end of the group. So notwithstanding the performance, I think that we're attractively priced. So I want to talk about the team. This is kind of the same slide that you would have seen at the last presentation. It's myself with 20 years in the mining industry, began in the uranium sector as a sell side analyst, like Dave in 2006. I've been on the buy side. I've been in investment banking, and I've helped start and been on the boards of a number of different uranium companies. So come from the space for a long time. I've added mining people, both in the financial side and on the technical side, and the board of directors. Although, and then as I pointed out, we still have Richard from Mega and Lee Courier from NextGen involved as advisors. We've changed the board over the last year and brought on very good mining and M&A experience to help on that side. And we've been adding to the team. And so the next slide is really, as we grow the portfolio and look at new opportunities, we've been adding bench strength. So we've added people in the financial side and in the technical side, and also through consultants. And I think the one thing I would highlight here, a couple of things I would highlight is, first is, we're still remain a very lean organization, and everyone on this list, other than myself, is on a more of a part-time consulting basis, but we can bring them in particular projects when we need more time and more focus from them. But and a big part of the story is, let's keep the G&A very low and really leverage the capital resources into new acquisitions. But inherently, as we build the business, we need more more people, and I think we've done a good job attracting these people in. And one thing that I've thought just recently as I was going over the presentation just before now is we should add where the people are located, because in this COVID world and having projects around the world, it's important to have people in the different geographies that you're working in to get things done. So here, while most of the people, especially in management and on the board, would be based in Toronto, we do have people in the US, we have people in Australia, we have people in the east coast of Canada, where you'll see that we have projects or are looking for projects. And I think that's an important sort of notion as you're building businesses in this COVID world, where you can't go traveling around the world. You need trusted people in those jurisdictions to operate for you. I think we've done a good job putting those people in place. So now this is a repeat slide, but I think it's important for those of you who are trying to understand why are we in this consolidation business. And really, this is the case study. This was the original idea that kind of said, this was the light bulb idea when we said, hey, we should do this. It was successful in the last cycle. And this is a chart of Mega Uranium. They were one of the first players in the uranium space and to deploy this consolidation strategy. And this is a chart from the beginning of 2005 to the end of 2006. They completed, I think they completed about 9 acquisitions over that period, and we sort of mark how they did it. They raised a bunch of money along the way, $50 million over that period. And of course, we'll show here that the market cap went from 15 million to almost $1 billion, and the share price went up 25 times. And so, of course, we look at that and said, let's see if we can emulate that path. The green line is the uranium price. So obviously, you need the price to cooperate as well for this strategy to pay those kind of returns. And it did in this case. So it went from in the 20s to it ended the year kind of mid to high 60s. And then in 2007, as many would know, it peaked out in the 130s. But this is a proven strategy. And we also would note that a number of other companies executed it, whether it's Paladin, who many of you would know of. Energy Metals was a company that did this in the US that got taken over by Uranium One, the next name on the list, who was also a consolidator. So what have we done so far? And we'll run through this relatively quickly, and certainly we'll open up for questions that people have on specific projects. Again, as I talked about, we have projects in 3 countries, Canada, Argentina, and Australia. And in Canada, of course, we have projects in multiple provinces and territories, so Nunavut, Labrador, and Quebec. And the resource table, and we talk about that resource per pound. And one of the criteria that we've sort of focused on when we're looking at projects to acquire is having historic resources. And in this case, all the projects that we've acquired to date have had resources. Here's the table. These are all historic in nature. We haven't updated 43-101 technical reports on them, but we're allowed to list them and show you them. And although I can't sum them up for you in this table, you can see that we've established a good critical mass of resources through the projects that we've acquired up until this point. And so we think we're very happy with how many pounds of uranium and vanadium we've been able to bring onto the resource table in a short amount of time. So we'll go through the projects one by one. Again, I'll keep it relatively quick because this is an update rather than a full deep dive into each project. The Ben Lomond and Georgetown projects are in Queensland, Australia. These are the first projects that we acquired when we changed the strategy into uranium. We acquired them from Mega Uranium. And interestingly, that chart that I showed you of Mega's case study, these were the first projects that they acquired on their way from going from $15 million to $940 million market cap. We closed it in June of 2020. Again, when we talk about the criteria, we look for projects that have historical resources, but lots of money spent on them. These projects had about 30 million spent by Mega. Our take on them right now is we are taking all of the historic data, we're pulling it together. We have our VP Corporate Development, Pete Mullins, is based in Brisbane. He's pulling all that data together. And effectively what we're doing is putting together a plan of when we go and exercise this option. And so I'll talk just in 1 second about how we've acquired this project. When we exercise the option, what programs would we take forth? As we look at these projects, we see them as high grade, low capex potential development opportunities. if you went back to the previous slide, you would see that the resource grade at Ben Lomond is over 0.2%, which is high grade on a relative global scale. And although it's small and just around 10 million pounds, we think it has an interesting development potential as well as exploration upside. So we're taking all of those considerations into play and working out the plan as to what we would do with this project. Again, when we exercise it, and the way that we've structured the transactions largely, and you'll see this throughout the at least the first 4 acquisitions that I'm going to show you, is we've structured them as options. And the acquisition terms here are sitting on the right-hand side of this slide, where basically we gave the vendor some shares, in this case warrants and cash up front, for the right to purchase the project on a 100% basis for a fixed amount of consideration for a period of time. So in this case, it's $3 million, and we have 24 months to make the decision to exercise the option to acquire 100% of those projects. Importantly, we can satisfy that consideration in either cash or in CUR shares at our election. And the sort of theory went at the time was we were obviously a much smaller market cap company, and that to pay $3 million in cash or shares at that time would have been highly dilutive to the company. And if we were right and we could get a bunch of other deal acquisitions done and the market started to pay attention, that we could get the commensurate share price movement where when we went to exercise this option, we could issue far less shares than we would have at the outset. And of course, that's happened. So when we entered into this option, the share price was about 20 cents. Now it's over $2. So we're talking about 10 times less share dilution when we go to make this acquisition. This acquisition, in order to exercise it and own 100% of these assets, is subject to what's known as FIRB approval in Australia, and we're currently going for that. And then the other aspect of the transaction, which you'll see here, is we have some contingent payments that we would owe to Mega, assuming that we exercise this option, and they're tied to the future price of uranium. So as the price of uranium increases or hits certain milestones, 50, in this case 50, 75, and 100, we owe Mega additional consideration. And again, we can make those payments in cash or shares at our election. And certainly, we feel like if the uranium price does in fact hit those levels, these projects will be worth to us significantly more than we paid. And that will be a theme throughout the rest of the presentation here. So we'll go on to the next project. The next project is Mountain Lake in Nunavut, Canada. We acquired the option to this, or we entered the option agreement with ISO Energy, who own this project. This project, again, is a relatively high-grade project with historic resources. It was owned in a 50-50 joint venture in the previous cycle by 2 companies named Pitchstone and Triax. The combined market caps of those 2 companies at the peak of the first bull market there was over $200 million. Our commitment here is 900,000 shares up front and then $1 million to exercise the option. So we think that price is a very compelling price. And what we see here is potential for higher grade exploration targets beyond what the previous operators had done, although it had been drilled with 220 holes by past groups. And again, in this case, we need to get CUR shareholder approval to exercise this option. So we plan on taking that to our shareholders at our next meeting this summer. The next project is Morin Lake in Labrador. And this project, again, was a project that had seen significant past exploration expenditures. $25 million were spent on the project by the previous operator, which was a company named Crosshair Exploration. They did both a uranium and a vanadium resource. So this is the first project we're talk about that also has vanadium. We have 2 of them, and vanadium and uranium do come together in uranium projects around the world. So it's something that will continue, I think, to add to our resource mix. And with the price of vanadium having a good run this year itself, we think that this is a bit of a sleeper part of the story, and it'll start to attract investors on its own over time. This project is located in the Central Mineral Belt, which, and you can see the map there. I guess it's a bit small, but we're the green. I think the important pieces to point out are the kind of, I guess it's the light orange. That is Paladin's Michelin project. Michelin, they acquired at the end of the the bull market. It was a public company called Aurora. I believe it traded at near $1 billion market cap in the peak, and Paladin's been holding on to that project. So we definitely see this camp as a very interesting place to be and have the critical mass to develop a uranium mine over time. The most recent sort of interesting development in the camp is all of that blue ground that you can see in the map was staked earlier this year. The blue is Altius, and Altius has a long history both in the East Coast, but in the Central Mineral Belt. And so we're encouraged to see other players come into this area. I think it's going to start to get active, and we're very happy to have one of the most advanced and most significant resources in the camp. Again, I'll let you guys read through the acquisition terms on your own, but it's the same structure. It's some upfront shares. In this case, it's shares in cash. And then we have 36 months in this case to exercise the option to acquire 100% of this project for $1 million in CUR. And in this case, it's half cash and half shares that we would have to pay. And here we are working on a 43-101 report here. We've got the draft. We're having some delays on with respect to site visits, which is a requirement. And with COVID, there's some issues getting people to site. We are permitting though a small exploration program there this summer. And if you refer to our last press release, you'll see the details. But yeah, we're doing a little bit of work there. The next project that we acquired or signed an option to acquire is Laguna Salada project in Chubut, Argentina. Again, this is another project that has vanadium, so it's uranium and vanadium. The previous operator, U308 Corp, spent about $15 million on the project. There's a resource estimate published and a PEA, so it's relatively advanced. Argentina, I think we would acknowledge that it's a challenging jurisdiction to operate in certain circumstance. We like it for uranium because it is a nuclear country. They have 3 reactors, and as long as I've been aware of Argentina as a uranium jurisdiction, I've been hearing discussions about the need and requirement and interest in having domestically sourced supply, not dissimilar to what we hear about in the U.S. And so we're quite happy, especially given the terms that we've been able to negotiate this deal on, to have this as part of the portfolio. We also think that there's significant exploration upside on the project. It's a very simple at-surface ore body that the geological formation has been identified to be much more significant than where the resources are today. But previous operators didn't spend a lot of time looking for more material. They really focused on how do you extract it. It is quite a low-grade resource, but they did make some good progress on beneficiation and being able to recover the resources here. So we're encouraged by that, and we'll continue to look at some of that work ourselves when we exercise the option. We're currently waiting for exchange approval on formalizing that option agreement. Again, I'll let the readers look through those acquisition terms themselves. The last project that we've acquired is Dieter Lake. In this case, we staked this project. This is a project in northern Quebec. It was held by companies that you would know, Uranerd, Strathmore, Fission, and most recently Denison. It was available for staking. And again, I think this speaks to our knowledge of the space, and really we have been targeting forgotten projects that are gone by the wayside. I think this clearly fits into that camp. And for the very reasonable cost of staking the project, we were able to pick up what's an inferred resource of almost 25 million pounds. So we're very happy to have this project for the price paid. We do see potential there, and we're having our technical team review the historic work, and again, just like every other project, come up with plans for what we would do either when we've acquired the project or when we think that uranium price is moved significantly, that we'll get incremental value from actually doing that work. Right now, we're still in the consolidation mode. So speaking of that, the path forward, what are we going to do next? And I think we touched on quite a lot of this throughout the presentation of the individual projects, but really our white space is the entire world. And so that's why we put this map here. This is normally the front slide of our presentation, but there's uranium all over the planet, and a lot of it, again, has been forgotten. And during this 10-year bear market, the companies that have have stuck around are the same companies with the same projects that everyone's familiar with, and they've been doing great jobs keeping those projects going. But there are a lot of projects that have kind of gone by the wayside that had significant expenditures in the past cycle, carried big market caps, and can be acquired relatively cheaply. So what are we doing? We're putting together a diversified portfolio approach, and I think one of the lessons that we've learned over the last kind of 15 years being in this space is that having one project in one geography can be challenging, and we've seen very good projects in the wrong jurisdiction go sideways for primarily geopolitical reasons. I mean, uranium is a very challenging metal to permit and bring mines forward in. And so what we want to do is give shareholders the benefit of diversifying across both geography, stage of development, and deposit type, and we're starting to do that with the portfolio we have, and certainly we've got some ideas about where we would go next and what would be good additions to the portfolio. Again, as I've talked about, we're looking for projects that have significant previous expenditures, including historic resources. We always look at everything sort of on a project first basis. We want to find things that have attractive development characteristics, obviously, and then the structuring of the acquisition terms. So I think we've been very successful in getting deals done and being good counterparties in terms of coming up with transaction structures that work for both parties, where we can meet the needs of the vendor, but also provide our investors with that kind of staged terms. And so we can lessen dilution over time in that regard. And I think the only thing I would say, without being able to get into too much detail, the pipeline is full. Notwithstanding the resurgence recently in the uranium space, there's still lots of opportunities. And particularly as we get bigger ourselves and have more access to capital, more opportunities are walking in the door or becoming more available to us. And that was always the strategy, was to put together a critical mass of the company, get to a certain market cap, get to a certain ability to access capital, and then go after bigger and more marquee transactions. I think that's what you'll see us do next. And of course, is what we're looking for is things that sort of either fit with the existing projects in the portfolio or provide that diversification that we're looking for. Again, whether it's across different geographies, stages of development, types of deposits, and of course, the goal would be to have things that ultimately we can develop in what will need to be a higher uranium price environment. So that is the end of the presentation, the update presentation. I think we'll just leave you with these kind of bullet points there. We think we've got an attractive portfolio of projects, good jurisdictions, good grades, lots of past expenditures. We're busy evaluating new opportunities. I think just went through our approach. We think we've got a compelling valuation. We're well funded with $14.4 million in working capital. We've got a great team that we continue to add to, and great shareholders, quite frankly, who are definitely there to support us on the next leg of this journey. So that's me, Dave. Thank you.
Okay, thank you very much, Phil. Very informative presentation. So we are going to kick off the Q&A portion of the webinar right now. A reminder to everybody, just type your questions into the chat box and we'll get to them as soon as we can. As we get started here, Phil, I'm going to plug Red Cloud's Uranium Conference coming up on May 13th, which of course you are going to be a part of. Also, Grant Isaac from Cameco will have a keynote. But Sachem Cove and Segra, who are a couple of your shareholders, as well as L2 and I, will be involved in a fireside chat. So, just on that note, are you seeing sort of a change in the average investor, uranium investor, over the last 6 months? You said you did have about 20 institutions in your last deal.
Yeah, I think we're seeing more people come into the financings. I think we're getting. We started with the very specific uranium fund guys who just, they have to be, they're invested in the space, not because they have to be, but because they built the thesis and they said, hey, this is where we want to be. And so they saw what we were doing and they said, yeah, we want to back you. And then as we've sort of executed on the plan, we're seeing more traditional investors, both resource funds and hedge funds, and then just more groups globally. And I can't tell you, it's not just the institutions, and of course we focus on that because those are the groups who are very sticky money and will help write checks in the future as we go to do bigger things. But I can't tell you, when we put out a press release on a financing, the number of inbound retail investor inquiries that we get, we've unfortunately had to turn a lot of them back in the last couple of raises. But it's fascinating to see on a company that, again, is new, and we're not in every uranium table just yet. I think we're getting there, but that's been the most fascinating part. There are a lot of investors that are just very interested in the space.
Okay, I have a couple of logistical questions here. How much cash do you have, and what's your burn rate?
So we have 14.4 million in working capital. So that includes shares of NextGen that we own. So we have 280 million shares of NextGen, which came from the original. We're part of the predecessor company. Our burn rate's a bit of a moving target, and as we're adding more people to the company, it's still not that significant. I would say on a G&A basis, it's less than $1 million a year, but we'll ramp it up. But what we're trying to do is we're trying to step it up sort of gradually with the projects that we bring in. Again, I would make the point again that the bulk of all the funds that we have are dedicated towards new acquisitions.
Okay, and I do have a question about the structure of your options. They're often called cash and share upon signing, and then milestone contingency payments. Are those contingency payments valid only during the exercise period? Do they continue in perpetuity, or do they disappear when you exercise the option?
No, they only start when we exercise the option. So we're not obliged. So if we haven't exercised the option and the price goes to $50, we don't have to make the payment. We only make the payments so after we exercise the option, and then those are live for 10 years typically. I would tell you each individual agreement is bespoke. So depending on the counterparty, certain structures were put in there or not in there depending on who they are. So I think rather than go into them specifically, I mean, they're a little bit different, but no, we don't make any of the option payments until we exercise the projects, the contingent payments.
And then just to clarify on the NextGen ownership, is that 280,000 shares of NextGen?
Yeah, it's 279 and 791. But thereabouts.
Okay, perfect, thank you. And then how about plans to list in the US?
Oh yeah, so we're in the process of doing that right now, and I think we should have a OTC listing within the next 30 days.
Okay, and what's your take on Argentina? Do you think that jurisdiction is really open for business? Are there any limitations on taking money outside of the country?
So Argentina continues to be a challenging jurisdiction. There's a lot going on in Chubut right now around Navidad. So we're following that very closely. We have, between myself and some of the other partners in the business, we have a lot of experience down in Argentina and a lot of connections. So we're taking a bit of a wait and see approach there. I think, we are playing a long game here. So acquiring these assets that we can, and we always look at holding costs. So we're trying to find projects that we can hold and then putting the waste right back behind you. I think it will be an open opportunity, but it may take time.
Great, thank you. Are there any jurisdictions that you would avoid? And maybe I'd even ask, places like Kazakhstan, would you have any competitive advantage working in Kazakhstan? Even I think subsurface agreements you'd have to deal with. What are your thoughts there?
So, look, so there's lots of jurisdictions we would avoid. Start with jurisdictions that don't have uranium, but then further down, there's certainly uranium jurisdictions that we would avoid, having seen what's happened in the last section. Kazakhstan, I think, is a difficult one for us. It's not off the off limits, but I don't think the entry. I think it would be so competitively priced that the entries that we're looking for, we wouldn't be able to get unless we find some way to get in there that other people don't know of. And I think there's lower hanging fruit for us. but certainly we'd love to be there. I mean, it's a great uranium jurisdiction, and it's a company made. It would be a company maker for us, as it has been for other companies that have gone there.
Mm-hmm. Okay, yeah, the consolidation business was successful in the last cycle, and you did mention you have rigid acquisition criteria. What's your main M&A criteria when you look at the projects? You know, it can't simply be unloved projects. What else do you look at?
Sorry, it can't simply be. What was the second part of that?
Unloved,
Oh,
or beaten path.
I mean, look, it does start from the position of, okay, what opportunities are there available? But we're looking for, so we need to see things that had significant past expenditures, have resources in place, and carried market caps in the previous cycle, but that do have development potential, right? So I could take you through each one of those projects that we have and give you, like, here's why we look at this one as being interesting. And you know, I just said Argentina, Labrador, the camp is going to support a uranium mine in the future. We have one of the anchor resources in that camp. How it ends up developing and what our role to play in that is to be seen, and whether the mine is built at the C zone or not is up for grabs. But will we be part of this story when Labrador moves forward? I think we will be, and that's the way we're trying to play that opportunity. And I can take you through each one of our opportunities and show you why we think they have development opportunities.
Yeah, that sort of leads into my next question. You know, you have development projects, you have some exploration projects. Do you plan to carry out any field work or improve the value of these assets? You know, perhaps joint venture them out using other people's money, sell them off. What's the end game for some of these?
So it's a good question, because it's the one thing that I didn't touch on in the case study slide. So we showed you how Mega started and consolidated all those projects. What I didn't talk about is what happened after. And when we do anything, we do look exactly how does this play out, and what's our role in that. And so with Mega, what they had done, you know, they acquired all those projects, and then either by spinning assets out, so they spun out assets into U3O8, they spun out assets into Toro. They spun out assets there. They gave the original projects to NextGen, or sold did a deal and created and put those assets into NextGen. And so we look at kind of the end in mind. In terms of work, I think we're still, our position is still that there's more of it where we can gain more value for shareholders by making accretive acquisitions than drilling additional resources. So I add another 2 million pounds of resources to any one of these projects, I don't think that's going to move the needle. It's going to cost me a lot of money, time, and energy. Where I can better spend that money. So if I spend $2 million to get 2 million pounds in one project, I could spend 2 million as a down payment towards a $20 million acquisition, which we can get $100 million of value in the market for over time. That's the way we look at it.
Okay, nice. $30 uranium. You know, do you think that a prolonged spot price around $30 is going to help you close more deals, or do you think it's going to hinder? Should we not see many changes, you know, over the next 6 months, 12 months?
Oh, I think it helps. I think it helps because, you know, this is a feast or famine space, and when the money's flooding in, companies will be less likely to do deals with us. We still have a huge amount of opportunities in front of us, so I'm not really worried about losing some of the things that we're working on. But that kind of marginal opportunity, or not marginal in the sense of that the opportunity is marginal, but an opportunity that kind of sits on the fence as to whether the seller does or does not want to do a transaction with me versus, say, maybe just taking that asset and starting their own uranium vehicle behind it. At $30 uranium, where it's not everyone and anyone can raise money all the time, I think that those assets probably flip back towards more likely to be doing something with us. And I think people will find it more compelling to be part of this bigger entity with the investor base behind us, with the team behind us, and now the track record, rather than, hey, why don't we try to sort of run this single asset, single jurisdiction project up the flagpole ourselves again, where we had sort of not the greatest luck the last time around.
Right. Okay. And a question came in, and maybe we just clarify this. This is going back to the question before about, you know, putting other people's money to work or putting your money to work. You know, with no other work being done, is this simply an option play on the spot price? But no, I don't think so. You're actually investing in real projects that.
Well, I mean, I think that's one way of characterizing. Yes, they're real projects, but they are options. I mean, most of these projects, quite frankly, need higher prices, just like every other project. But by buying them under option and then having the optionality on the price of uranium, I think we have the most leverage of any of the uranium juniors.
How about COVID-19? Is this sort of slowing down your ability to do deals or do site visits? I know both of us have probably been over 100 sites each around the globe. So, is this slowing you down at all?
Well, I mean, in some aspects it is, but in some aspects, because of what you just said, it's helping the business plan. Because I've been to 100 projects around the world, I don't need to go to them again to see if this is a project that works in our portfolio. I've already been there. So I've already been to Ben Lomond. And in fact, can you put up the presentation? Because I didn't put up the last slide, which was important and speaks to just this. So this is a picture of me at Ben Lomond. And if you look at the timestamp, it's 2006. So again, just to exactly what you've just said, we've already been to these projects, so it doesn't slow us down in that sense. We know between myself and someone in the group, it's a very good chance that we've been to the projects. Where it does have an issue is, for example, this technical report that we're putting together in Labrador, we just found out today because of the COVID, the bubble, the Atlantic bubble is not opening. We can't get someone to go to the project until May. We thought we were going to get the site visit done this week. And so it is impacting that. But then, as I pointed out in our team slide, we're definitely very much focused on finding people in the jurisdictions that we're working in so they can do the local work. And I think we've done a pretty good job of that so far.
Yeah. I'd say Mount Isa is the most uncomfortable place on the planet, but then you and I got stuck in Guyana, so we'll leave it at that. So, you mentioned assets in Nunavut. Do you have plans to go back to that territory, and then specifically Valor's Angelac project, as has been mentioned by somebody here?
I mean, look, listen, yeah, that's not my project. I don't have any, that's their project to do with what they will. I mean, I think it's a great project and I think it would be a great fit in the portfolio. There's also other projects in Nunavut. So we can, Kojima or Rano, sorry, the name, they have a project up there, and there was quite a lot of exploration work done in the Thelon Basin in the past. So there's opportunities up there. I think,
CEO Jim Paterson was our guest yesterday, and I don't want to put words in his mouth, but while none of it's not his focus, he wouldn't necessarily call it non-core. It is 43 million pounds of 0.7% amongst the highest grade outside of the Athabasca Basin, and they've sunk 55 million into the project. Certainly wouldn't move it if somebody wasn't looking to develop it. And that said, I think they think they can explore it as good as anyone. They're just happen to be busy somewhere else. So, yeah. So do you guys own some of the gold projects that were associated with the NX Gold company? Do you have a strategy associated with those? Are you planning on selling them?
Yeah, so we made an announcement late last year that we did a deal with the underlying vendors of the Kulu project, and because we had remember NX had the original formation of the company, NX Gold, was around an earn-in agreement on Kulu. We terminated that earn-in, and we're taking an equity position in the private company that has the Kulu license. So we still have exposure through that. And then our Western Australia gold projects we still have, but are certainly I would say they're definitely non-core, but we're looking for ways to realize value for those, and so we're open.
Okay, I think this is our last question. We are coming up towards the top of the hour, but if there are any other questions, put them in the text box. Right now you guys are trading about 50 cents per pound without adding the vanadium. With adding the vanadium. Yeah. Do you think you already have some optionality built into the story here? Right now people might not be paying up for the options, but do you think they'd actually pay up if you become 100% owner of those pounds?
Potentially. So we're looking at that, of course. I think I would point out, and it's in the fine print on that slide, to get those numbers, we did dilute the share table to account for exercising all those options. So those numbers have those options baked in, because in totality, to exercise all the options, it costs us $6.5 million, of which 6 of that we can pay in shares. So we took that dilution, but I guess the question is slightly different: is if we own them 100%, will we get a better valuation? And maybe, and I think it's really the time to look at that, especially given the move that we have had in the share price and the move of investors coming into the space. So I think that's probably a pretty prescient discussion.
Okay, great. No further questions out there, Phil. So, thank you very much for joining us today. Thank you, everybody, for tuning in. Reminder that Red Cloud Securities will be back tomorrow.